Hi, it's Lee, and welcome to the Tesla Economist. Alright, as Tesla Economist viewers, you already know what Tesla's deliveries are for Q3. Of course, this quarter was as we expected, record production and record deliveries. However, what was also a record was the discrepancy between the two. Tesla produced 366,000 vehicles, which is really good. This beats Wall Street's estimates. Now, due to the fact that Tesla sells every single car they make and can make a lot more again and still sell them all, then this is the number that matters to investors. However, Wall Street seems to care more about actual deliveries or sales each quarter, which is in line with more traditional auto manufacturers that can increase their supply easier than Tesla. In addition to that, legacy automakers are not facing extreme growth quarter over quarter. Their infrastructure and logistics is fairly stable, at least most of the time, and all established. Whereas Tesla is growing like wildfire, and every quarter need to find new methods of trying to ship out more cars than the last. As I had stated, it was likely that in the last month of the quarter, which they have historically done, they were producing more cars in Shanghai to be sold domestically, thus having fewer cars stuck on ships headed to Australia or Europe, and would thus not be able to count for deliveries, even pushing sales offering discounted insurance in China. Judging from the comments from Tesla regarding deliveries, it would seem that this was the case for September. Not only that, Tesla underwent massive line upgrades in Shanghai this quarter too, thus further increasing their production capacity to larger than ever before. Therefore, it was likely that a huge number of vehicles were to be pushed out domestically in China in just the last month. As a result, Tesla even state that it is becoming increasingly challenging to secure vehicle transportation capacity and at a reasonable cost during these peak logistic weeks. That meant that there were 22,000 fewer vehicles delivered than produced for the quarter, at 344,000 deliveries. Now, if we ignore the catastrophic Q2, that is still 35,000 more deliveries than Q1, an 11% increase over just a couple of quarters. Or if we take year over year, last Q3 was 241,000 deliveries. So this is still a 42% increase. Okay, 42%, not too far off our 50% growth that we hope for. Oh, but that's deliveries. That's not the real growth that we care about. Now, when we compare the production difference year over year, then we see 54% year over year growth, which is fantastic. It's even more than our 50% fanboy target. Bear in mind, Wall Street has not priced in 50% growth year over year. If they had, the PE ratio gets lower than Ford's by about 2025. However, we don't want to cherry pick numbers to create some confirmation bias, as we could equally look at Q4 2021. Staying with production numbers, we had 306,000 in Q4. That's only an increase of 12% over 3 quarters. I'll be honest, that's not great. And this is with 2 new state-of-the-art factories. That's not a lot of growth over 3 quarters. Possibly the lowest growth we've seen over 3 quarters, and even worse if I used delivery numbers. But not to worry, everyone. Statistics can be used to make things look good or bad, as they're so arbitrary, which is why I always say not to pay too much attention to them, especially when they're to do with Chinese EVs. Now, I don't want to try and spin this too, by leading you on to make it look like Tesla are doing better than they are, so we will stick with data and facts, because we use real dollars to invest. Well, as you likely know, Tesla production in Shanghai was down for some of the quarter, due to new line upgrades. The lines also had to be restarted and ramped up and refining the new upgrades. This meant that for part of the month, the lines were at the previous speed, and then there was no production happening on the lines for a couple of weeks, and then they had to ramp back up, all resulting in significant downtime. Tesla's production lines have been progressively ramping faster and faster for some time, but they do eventually reach a plateau where they actually require some serious upgrades in order to increase production speed. This is only necessary when there are more cells and batteries available to Tesla. Due to the influx of LFP cells we've seen lately, mostly due to the new CATL factory nearby Tesla's Giga Shanghai, Tesla were able to then justify such an upgrade to meet the supply of their biggest bottleneck, battery cells. Now, it's still so highly underrated that Tesla are actually able to just make line upgrades and suddenly hit what is 3 times volume production on the Shanghai Model Y line. I'll say it again, 3 times volume production on one line, whilst everyone else is struggling enough to get half of that, of which I mean half volume production, not half Tesla's rate. As in, Tesla's lines produce about 6 times as many vehicles as the competition. This is highly underrated, but it gets drowned by all the other Tesla highly underrated qualities, of which I like to continually reiterate. Just another quick one off the top of my head, their charging network. But the economies of scale you get when you hit 3 times volume production is going to increase those profit margins to an unbelievable level. Their cost of goods sold per vehicle will be less than a BYD. And BYD have to sell their BEVs at a loss, as BYD compared to Tesla like night and day, or best car I've driven and worst car I've driven. But we did suffer this downtime as a result. As for Fremont, well, when we get the CPCA figures for Shanghai for September, then we can work out what sort of growth may have occurred there this quarter. We did, however, see 25% growth for Model S and X production. Still kind of slow if you ask me, but this is actually higher now than where they were before they took down these lines. So that's something. And we're also expecting to see a further 50% more growth with that line. They're just very complex vehicles, as Tesla knew a lot less about manufacturing back then, and they had high price tags with lower demand, so could justify slower, more expensive production techniques. But Elon can't let these models go for sentimental reasons, and they're the 2 best cars in the world that do things no other cars can, with incredible engineering. Anyway, we've been told to expect a reasonable amount of growth still to come from Fremont, perhaps at around 20%, perhaps in a few months. Likely some will be felt in Q4. But this year, aside from having lockdowns in Shanghai, the biggest disappointment has been these 2 new factories. We were expecting volume production by around this time. Revolutionary new production techniques that can be ramped up faster than never before seen, accompanied with cells and batteries that will reduce costs, improve ranges, and increase production speed. Yes, perhaps it was too good to be true to happen this early. Good things take time. At least Tesla have done what they can to put out the fire of the cash furnaces and mitigate the costs of these factories as best as possible. It's obviously not an easy task, but Elon and Tesla are well aware of the rewards that come once those 4680 cells are capable of high volume production. I hope that someone has the brains to ask the progress of them in as much detail as possible when it comes to the Q3 earnings call, although I would have expected Tesla to talk about the progress anyway. The Berlin ramp looks like it will be okay eventually, having to pivot to more rear-wheel drive Model Ys using LFP cells, or at least Berlin is okay when it comes to reaching volume production with battery supply. Germany is also facing an energy crisis too, which is obviously a big risk, especially as winter approaches. As for Austin, I can't see many reasons for that factory to ramp up to much more than about 1,000 units a week. There simply won't be enough 2170 cells. The only reason for the factory to ramp to anything decent will come down to the 4680 cells. Remember, Tesla don't offer the standard range rear-wheel drive version of the Model Y in the US, as the range is not sufficient to a US consumer. If there is a higher abundance of LFP cells, enough for Tesla to make a rear-wheel drive Model Y there, I'm not sure if Tesla would resort to offering that variant. Q4 is far more exciting. This is where our hopes are really set. And there's a reason the one call option I have, well, 3 now, doesn't expire until January rather than October, because Q4 should be the big one. There's still a possibility of getting close to 500,000 deliveries for that quarter. Of course, we have 22,000 extra cars in inventory now for that quarter due to Q3, so perhaps we really can get close. Even at 470,000 deliveries, and that is a 37% increase quarter over quarter, which will be huge, and it's doubtful that Wall Street has priced that in. It would also be 52% year-over-year increase in deliveries. I'm not going to lie to you, there was nothing great to see from these Q3 numbers. The new line upgrades in Shanghai are not running as high as we'd hoped, at least not yet, but perhaps they'll take a little bit of time to refine. The new factories don't seem to have contributed very much this quarter either, but the future of this company is not dependent on this one quarter. This quarter is still not an accurate representation of what Tesla can achieve or even where they are now. In reality, after these numbers, nothing has changed. What do I mean by that? Tesla have still not started volume production for the 4680 cells. I can't stress how much that is what the future of this company comes down to. And like I said, hopefully we get a detailed update on Austin production and 4680 lines on the call. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.